Remember, we've been talking about a theme about how promoters have been selling off their crown jewels. Let's get in Vivek then, who's got some data crunching and joins in with some of the companies that have had to undergo the same. Vivek.
Well, good morning. Well, we're talking about two separate things here. Number one, we're talking about companies that have a lot of pledged shares. So a lot of the shares that they own in their own company are actually pledged with financial institutions towards which they actually owe a significant amount of debt repayment. So this is the first thing that we are tracking. The second thing, what we are going to, number one, is that whether these companies are able to service their debt and are debt repayments happening on time, given the fact that we have so many institutions like the NCLT, the IBC process in place. It is actually becoming very tough for promoters who are unable to service their debt in time to retain their crown jewels. The third and the last thing that we are looking at is the kind of steps that a lot of these promoter entities have undertaken in order to ensure that number one, either they do not lose their assets, or number two, what they're doing is they're trying to get they're trying to service their debt obligations on time to the lending parties. So number one, we're looking at the list of companies that have a very high pledge shares against their name. Adani Ports, almost 62% of the promoter holding is pledged. Zee, Dish TV, Reliance Infra, NCC are amongst the names that actually have a significant amount of debt holding. But more importantly, what we need to focus on at this point of time, given the last 2 years, have actually seen a significant amount of M&A as well as stake sales that are happening in big companies. So the first one that you need to look at is the Jubilant Group. Jubilant Foodworks as well as Jubilant Life Sciences. Promoters have been consistently paring stake via various block deals in the open market to get rid of the debt. Apollo Hospitals, the company has a significant amount of debt, but the company is looking to monetize some of the various assets, including the insurance arm that it has, to go ahead and reduce its debt. Imami, again, the company has clearly said that both the cement IPO, which is pending, as well as the open market stake sale that the company is looking at to actually go ahead and do the stake sale. So similarly, the SL Group, of course, it's in focus because of this D stake sale. GMR Infra, ADAG Group, significant stake sales happening there. DLF, Mindtree, the BG Siddhartha deal, and lastly the SR deal. So looking at all of these, clearly promoters are quite forced to go ahead and sell some of their crown jewels.
Okay, let's take this discussion forward. Joining us right now, Amit Tandon, founder and managing director at IIAS, joining in on the show. Amit, hi, good morning. My colleague just listed out a fair amount of list wherein just in the recent history one has seen promoters cut down their debt. Where do you think this compulsion is actually coming in from?
Well, this is the new normal. If you look at it, that the bank behavior has changed over the last few years, and this is coming because of the changed regulatory regime. You've got the NCLT, you've got IBC, you've got RBI breathing down their neck, telling them that, look, the moment you have a default, you need to start acting on it. Whether it's 180 days, 270 days, we can kind of look at that. The other change which we are seeing is that investor behavior is also changing. You go back 10 years, institutional ownership in equities was about 18%, and the promoters held about close to 60% of the equity. If you look at the same numbers today, promoters are in the aggregate at about 50%, and institutional ownership is at about 35–36%. So this relationship has also changed, and you have to just look at some of the transactions and how investors are viewing them. So if you go back about 7–8 years when Piramal sold its pharma business, they were able to keep the cash. When you look at what has happened with Prabhat Dairy, 97% of institutional investors who voted said that no, you have voted against the transaction because there wasn't any clear idea about how the money is going to be distributed. So you're seeing a change at both levels, with the banks at one level who are pushing for such change in behavior, and the other side you're seeing institutional investors who are actually on a day-to-day basis demanding more of promoters. So we are seeing this as a consequence of the environment changing around us. Back to you.
Amit, if everybody wants to sell, I wonder which Indian promoter would like to put their shoulder to the wheel and commit to capital. SL Group wants to offload, ADA Group is looking at offloading, GMR, GVK, across the board corporate India is in a mood to correct the binge spending they'd done in the last credit cycle. So apart from the Reliance Group or maybe the Adanis, there are no large buyers in the market. So don't you think there is a large vacuum, more supply, less demand?
Well, certainly there is more supply, less demand. But on the other hand, what I want to, or what I believe and what I like to say is that look, for well-run assets and good quality assets, there are always buyers. And you have a host of groups. So, if you kind of just to take names, if you look at someone like the Mahindras, you look at someone like the Asian Paint, you look at someone like the SRF, these are all businesses with low levels or relatively manageable levels of debt, spewing out cash. And so if there's the right asset, they would be looking at it. We've already seen, you mentioned Dish TV in your reporter did mention Dish TV. You already see that there are a couple of buyers who've lined up because it kind of fits in with their strategic plans. So it's not that you'd have a host of people scrambling to buy the assets, but still there is sufficient demand for the right quality asset, for the right player to kind of step in and swoop and buy it. The other is that, look, as you mentioned, there is a binge. Now there is a kind of course correction which is taking place. I think we need to give corporate India 1, 2, 3 years before they kind of digest either the excesses of the earlier times or when they kind of look at some of these M&As, and then people kind of adjust to the new normal. They will kind of borrow less, they will run their businesses far more tightly, sweat their assets more, till the lessons of this time are forgotten, and then they kind of go back to making the same mistakes again. This is a part of the cycle which we see repeatedly, and at least I've seen it repeatedly.
Okay, my next immediate follow-up question, Amit, here would really be that if I look at the current large buyers, the pension funds and the global large infra companies are looking at buying either assets directly or via stressed asset. For example, Brookfield, what the Canadian pension fund has done, how the Japanese pension funds are indirectly looking at buying India infrastructure asset. So isn't that slightly disheartening to see that a lot of our good infrastructure assets, our roads, hotels, bridges, ports, would be owned by foreign capital?
It depends on where you're coming from. If you want to see them, certainly for some of us, it could be an area of concern that who owns it. But for others could say that, look, as long as the asset is there on the ground, it's good enough. What is important to remember at least at this stage where we are in our development cycle, that look, maybe a handful of these assets do get taken over by some of the foreign players. Some would argue it's not necessarily bad, but the flip side is that we need many more bridges, many more roads, many more airports, many more railway tracks, and therefore there is still to say that, look, the handful which are being sold means the end of the road for the Indian entrepreneur and Indian promoter. I don't kind of quite buy into that view, because my sense is that we need to continue to keep investing, just given the state of our infrastructure and the state of our economy and the stage of our economy and where we are on the growth cycle. So I would say yes, maybe at this moment there could be some people who would be a little bit upset about it, but in the long run it's not necessarily bad. You've got some patient capital which comes in. The Indian pension funds are now a lot more robust than they were because of just the change in the regulation. So they themselves, it's a model for them to do something. And look, the other way of looking at it is to have a lot of these assets kind of half completed means that your capital is blocked and your capacity is blocked. So having the projects to be completed, being available to the people, is far more important than what the ownership is at the moment.
Amit, is there some sort of a fear now after the Supreme Court ruling that the NCLT won't have that much power? What the way ahead is going to be for some of these companies post that?
Well, I think we've not heard the last yet. The governor at the RBI, time of the RBI policies, and I think it was him or the finance minister at that stage, said that, look, they would be issuing another circular on this basis. And the whole NCLT, IBC, etc., we've seen over the past 18 to 24 months is in a state of flux, because it's the first time the regulations are being written out, they're being tested. And I think it kind of, at one level, also speaks about the tenacity of the Indian promoter, who wants to kind of hang on to what they have at all costs. So they will kind of challenge it, they will kind of push the envelope, they will see what they can get away with to ensure that they hold the asset. But I think it's good, because in a lot of these matters, laws getting clarified, laws getting written in a manner which makes it possible for the next transaction that happens to be a lot more smoother, to have a tighter timeline, to go closer to the 270 days which the regulations had originally envisaged. So I'm not so worried about it. I think there will be these temporary roadblocks or bumps on the road rather than roadblocks, but you know, we've seen that directionally, as long as we are moving the way we want to go, we should take some comfort in it. Sure, I do quibble about the pace, but that's the way we do things in India. We kind of find our own mean and head towards it.
Fair point. Okay, Amit, great to have you join into this discussion, and you know, this is definitely something relevant and prevalent in the market right now, and the good thing is that it's being rewarded by the market as well. You can see stocks of those companies which are you know, trying to consciously bring down their debt being rewarded by shareholders too.